Hello, this is Robert Miner with Dynamic Traders Group with today's daily DT 3-minute update and trade strategy. Every day we spend about 3 minutes with a particular market that's at or near a specific trade opportunity. And even if you don't trade the markets that we talk about in these daily updates for the public, is you're going to learn something because they're a teaching tool as well. So you can also follow me on Twitter at Bob@DT and of course on YouTube at Dynamic Trading with Robert Miner. Okay, let's check out a market for today in our 3-minute update. We're going to take a look at notes today, and whatever we talk about notes, the same applies for bonds because they're in exactly the same position. And the reason we're going to be talking about notes is that we're potentially in a great setup in the next few days, not right away, but certainly by the end of next week. We're in a position to enter on the long side if certain technical conditions are complete for a continuation of a bull trend to above the March 27th high. So I'll go over the reasons for that relatively quickly. This is the daily data, and more than likely we completed an A, B, C correction. Well, why is that? This is 3 sections down, and that's typical for a corrective decline, not an impulsive or trend decline. And in the last few days we closed into the closing range of what I got labeled a wave A. That's a closing overlap, and that's real typical to signal that a corrective decline is complete. And today, on today's news day, which was an FOMC announcement, we traded above what I got labeled a wave B high. That's another indication that, again, we're reversing the trend to bullish, and it's no longer bearish. So that's real significant. And also, and this is quite significant too, the advance into today's high was clearly an impulsive 5-wave decline. That indicates that the higher time frame trend off of the April low should be bullish. And this should just be a wave 1 of a 5-wave advance that should eventually continue to above the March 27th high. So that's why this is a fantastic market we want to be aware of and have on our radar over the next few days. If we've completed this daily high, which would be the wave 5 of one high, which is indicated that we have because we made a dual look back momentum daily bearish reversal, then we should be sideways to down for a few days to complete a corrective decline, then followed by an advance. So what's the specific trade strategy? Well, the next daily momentum bull reversal, as long as that's made with price above the April 17th low, that's a setup to be long. And it's a great setup to continue the bull trend to new highs. If before that's made, we decline below the April 17th low, then that avoids that trade setup. If we are making a corrective decline, it should be complete no later than May 9th. Now that's the latest. That's not the target for it to complete, but no later, and that's the 62% time retracement. Here again is this what I've got labeled as a potential, question mark, potential 5-wave advance, very impulsive looking, which means the higher time frame trend should be bullish. If indeed this is a wave 5, the typical wave 2 corrections around 50 to 62% retracement typically reaches around the extreme of wave 4. That's a kind of Elliott guideline, pattern guideline. We're almost there actually just in this 1-day reversal. So while we're looking to be sideways to down for at least 2 to 3 more days into at least early next week, is more than likely it's not going to be any significant decline if the higher time frame trend is bullish as anticipated. So it's going to be a great setup in the next few days. There's a lot of technical information I went through here very quickly, but more than likely we're just in the beginning stages of a bull trend, and we know what's going to avoid that. Trade below the April 17th low before we make a daily momentum bull reversal that voids that whole bullish idea. But boy, I'm going to be looking at this in the next few days for when we make the next daily momentum bull reversal to continue a bull trend, probably to above the March highs.